Good morning, students. I hope you like my introduction music. It is a song called Sailing by Rod Stewart. It comes from his album from 1975, which was very aptly named Atlantic Crossing. Now, as you can imagine, the reason why I played something that has to do with sailing, good morning, Dale. The reason I played something that has to do with sailing or flying, you also heard he was singing, I'm flying across the sky, is because we are talking about inventory and foreign exchange. Right, so we are going to be talking a little bit more about ships today, and we're going to talk more about flying, and then we are going to do question 5 in your handout. So if you look at the cash flows and foreign exchange handout, you'll see there are 5 questions. At the end of that handout, the last 5 questions that deal with inventory, you've got the solutions for the first 4 of them, but you haven't got the solution for the 5th one. So it is actually the 5th one that we are going to be doing today. But before we do that, ladies and gents, let's maybe just recap again. What happens in the case of importing inventory? So I'm going to just find a little PowerPoint that I drew up yesterday. Okay, so there we go. There you can see, yes, Dale.
Morning, Mr. Van Rensburg. Morning. Before we go ahead with the revision, I hope you don't mind me asking. I just need to find out when how things in terms of our current class structure going, if there's going to be a change to it for this term. Based on the letters, the finance students got inviting us back for face-to-face teaching. Is there going to be a change now from our lecturing side, or are things still going to stay the same? I know it's not related to work, but I just thought, as we have you here now, maybe you have a answer for us, sir.
Yes, that is a very important question, and it is obviously pertinent. What has been decided, it is going to be, each subject is going to decide how they are going to continue with their teaching and learning structure. I'm involved in a few subjects, obviously including financial accounting 2. In the case of financial accounting 2, we have decided that our classes have been conducted very efficiently online, so we are going to continue online for the rest of the year. There are some subjects that do not find it as easy to do online lectures. I can think of Pastel, which is part of accounting information systems. Very often the lecturer has to help a student actually on the computer. One other subject that I'm involved in, financial accounting 1, there as well, we are going to continue with online lectures. So to answer your question in short, Dale, it depends on the subject. But for financial accounting 2, we are going to continue with online lectures. The big difference now, I guess, is that all students will now have access to the internet. So we shouldn't have any connectivity problems because they can use the labs, they can use the computers in the residences or in the library. So the main thing is basically that everyone can certainly participate now in the online classes. The end of year formal test, though, is going to be a written test. So there, everyone will have to write it on paper. Does that answer your question?
Okay, sir, you actually you've answered basically all my questions. So just one more. So the class test we're supposed to write Friday, is that still going to be online?
Yes, the class test is still going to be online.
So it's just the final formal exam or formal test that's going to be written.
Correct.
Oh,
So we want at least the final one to be written on paper. So the class test on Friday still an online test, just like the ones we had before.
Okay,
Any
no,
other
perfect.
questions?
Thanks so much for that, sir. Appreciate it.
You're most welcome. Any other questions before we start looking at this little slideshow?
Mr. Van Reensberg, maybe we should just say that the full-time class test starts at 2 o'clock or 1400 hours, and the part-time class test, they can go and start at 1700 hours or 5 o'clock.
Yes, thank you for that, Mr. Borman. Yes, Dale, I guess all the students have heard that. I see we've already got over 50 students present, so it's a good turnout. Yes, so the full-time start at 2 o'clock, part-time can start at 5 o'clock. They can start earlier, I think, if I'm not mistaken, but 5 o'clock definitely. And then, if I remember correctly, Mr. Borman, it is available until what time? The part-time, I think it's 8 o'clock. I'm not sure for the full-time.
Full-time, I think it's about 5 o'clock.
Yeah, the full-time, I think it's about 5 o'clock. So from 2 to 5, and then the part-time from 5 to 8. Yes, that's right.
Thank you,
Okay,
Mr. Van Reensberg.
thank you, Mr. Borman. Dale asks 1 hour test. Mr. Borman can expand on that. It is actually a 1 hour test, but there's a lot of reading. There's a lot of reading. Mr. Borman and myself and Mrs. Moore had a meeting on Friday, I think it was. And Mr. Borman, I think we've decided to give them 15 minutes extra, if I'm not mistaken. So it's 75 minutes now, the test.
That's correct. That's correct. Thank you.
So I think we were very generous there, because it really should be a 1 hour test. But like we said, there is quite a bit of reading in that test. So therefore you get 75 minutes. Okay, so let us just recap, ladies and gents. So here we've got a typical container. You remember in the introduction class we said, you know, if you drive with the N1 towards Cape Town City Bowl, or if you come from the northern suburbs, from the north suburbs line by train, and basically just very close to the train tracks, to the left hand side, you see all of these containers. So there's a picture of a typical container. So this is a shipping container that is ready to be packed by the foreign supplier. So on the side there are doors that can be opened, and then all the inventory that you as a customer, you order from your foreign supplier, they can go and rent that container, and then they'll pack it within that container. That is actually pretty big. You get various sizes, but that is a standard size. You get larger ones as well, but that is a pretty much a standard size. I think the height is, if I remember correctly, 8 feet. So you're probably too young to know what 8 feet is. So that's about 2.5 meters high. So you can imagine you can pack a lot of things in there, right? Okay, so that's a typical container where the supplier will now go and pack some things in. Then we know that those goods are, well, the goods in the containers are going to be loaded on board a ship in the port of origin. In other words, the port that is in the country of the supplier. There you can see those ships are huge, because there are a lot of those big containers on them. You can also see those cranes that are used to load those heavy containers on board the ship. If you pass by Cape Town Harbour, you probably would have seen those enormous cranes there. Okay, so the goods will be loaded on board the ship in the port of origin. Now, what we must remember, ladies and gents, from the point in time that those goods are on board the ship in the port of origin until they reach the port of destination for the customer, but it is not under the control of the customer yet, and it is not under the control of the supplier anymore. And that is why we've got to negotiate as a customer. We've got to negotiate with the supplier who is going to be responsible for the goods while it is at sea. That is why we've got those various methods, the free on board system, carriage insurance freight system, delivered at terminal, delivered duty paid, and so forth. Right. So that is merely to decide who is responsible. For instance, as you now know, if it's the free on board system, from the customer's, from the supplier's perspective, the supplier is free from any responsibility with regard to the goods, which means the customer must arrange for insurance on the goods while it's on that voyage at sea. You know, if the ship sinks, then who's going to pay for that? So there's got to be insurance on it. If you have negotiated the delivered terminal method DAT, then it is the supplier that must arrange for the insurance. The supplier that must pay the freight company that is going to transport it by sea or by air to the customer's port. Right, and then as we know, what comes next? The ship must depart. So you know, there's a harbour master who knows the harbour very well. They cannot have that huge ship sort of maneuver within the harbour. So they've got these tugboats. So there's a tugboat pulling the ship out of the harbour. When we did we were the auditors when I was in an auditing firm, auditors of a freight and shipping company. The accountant was a person called Jack Wilson. And Jack Wilson was a very short, stocky guy, very strongly built, almost like a bulldog, you know, very stocky and strong. And his nickname was Tug. So everybody called him Tug Wilson, right? Because a tugboat, even though it's stocky and small, it is quite strong. Okay, so there the tugboat pulls them out of the harbour, and now the ship is at sea. So it's sailing on the ocean for a few weeks. If there's you can see those containers are quite highly stacked. So if you've got a storm at sea, or the ocean is not very flat for a period of time, then obviously the ship will have to go and find some refuge in a harbour. So if the ship comes from, let's say, Britain to South Africa, and there's a storm at sea, then they might have to pull into some kind of harbour in West Africa, right, just until the storm has passed. So that could cause a bit of a delay in the goods reaching you. And in any case, the voyage takes a while. And that is why we can have quite major fluctuations in the exchange rate during that period of time. Okay, so eventually, I know that I'm reusing the same photograph, right? It's just to illustrate the point. So eventually the ship arrives at its port of destination. It remains just outside of the harbour for a while until its turn comes to dock, and then it will be pulled into the harbour by a tugboat, and they will dock the ship. And then clearly, ladies and gentlemen, then the goods will have to be loaded off from the ship. I know I'm reusing the same picture as before, but it is just to illustrate the principle again. So the containers with those goods are then loaded off, and that is when we say it is now on shore. And as you know, it will have to go to the customs warehouse. We'll inspect the goods. And then once the goods have been cleared by customs, then the goods need to be transported, right? It needs to be transported now from the harbour to our premises. So if our premises is in Paarl, for instance, it has to be transported from Cape Town Harbour to Paarl. In this case, we've got the Mars container, and our company has employed a transport company with the name DCL, whatever that stands for. I cannot actually, it's too small to read. They've employed, or they are paying this DCL transport company to then transport that container from the harbour to their premises. Okay, ladies and gents, so that is just an illustration of what happens in reality to make it practical. Okay. So now let's go and have a look at our question. Maybe we can just pause there for a second or two. Are there any questions from your side? Oops, I must admit I haven't looked at the chat box now. Okay, now I am, and there are no questions there. But anyway, before we start with that question 5, which I've said is the last question in that cash flows and inventory and foreign exchange handout. Any questions from your side? Doesn't seem to be any questions. Okay, so now let's go and have a look at question number 5. Here we have it in front of us. I've accidentally just opened my Outlook. Just close that again, because then every time an email comes in, I just heard something in the chat box. Let me just go and see. Erasmus, is it just finance to be written on paper? That's a tough question to answer. As far as I'm aware, all the subjects are going to attempt to write on paper. I know there might be 1 or 2 subjects. What is the one? I think there's one subject that actually finished already with their work for the year. I'm not sure whether it's war or economics. But in general, unless your lecturer tells you otherwise, you can accept it's going to be on paper. Do you agree with that, Mr. Borman?
Yes, we are now talking about the final paper at the end of the year. Most of the subjects have opted to write on paper, as far as I know, but you will have to find out from your lecturer. But for financial accounting 2, the paper is set. It's a 2-hour paper, and it will deal on property, plant and equipment, cash flows, and foreign exchange transactions.
Right, so basically the second semester work. Thank you, Mr. Borman. Okay, ladies and gents, so there we have our question. So let's just go and have a look at what is required of us, and then we can work through the question. So we see under the required, they say prepare the relevant journal entries for the above transactions in the books of Boston Limited. Narrations are not required, but appropriate dates are required. And remember, we said on numerous occasions now, when it comes to financial accounting, dates are always important, but more specifically so even when it comes to foreign exchange. As you know, the exchange rates can fluctuate, so you have to know when to record a transaction, for instance. Okay. I also gone and prepared a little invoice at the bottom here for us, so we're going to populate or fill in the details there. So that we can keep track of what happens during the course of these events. Okay, so now we can have a look at the question. So they say Boston Limited. From the required, we could already see in the books of Boston Limited, right? In the books of Boston Limited. So our company, I know Mr. Borman emphasizes that normally. So we must understand our company is Boston Limited, right? And we are working and recording transactions and events in the books of Boston Limited. Okay, so now let's go and have a look at the question. They say Boston Limited in Belleville regularly imports inventory from an American company, Ohio Traders. Okay, so Ohio Traders is in America, and that means it is our foreign supplier, right? Ohio is the supplier, Boston is our company, we are the customer. Then it carries on, the company uses the perpetual method to record inventory movements. That is also important information. We'll have a look later on what impact it can have for us. And here, also very importantly, its financial year ends on the 28th of February. Again, an important date. Let me just go and have a look at the chat box. I heard a few noises there. Okay. Mr. Borman and Mrs. Moore can answer that. That has got nothing to do with this particular question. Okay, so the following transactions have taken place. So this is in 2016. They say on the 11th of January, purchased 400 units of inventory at $50 each from Ohio traders on the FOB basis, and 200 units of inventory at $50 each on the DAT basis. Right, the first batch on the free on board basis, and the second batch on the delivered at terminal basis. Okay, but in fact, I mentioned there purchased, right? But now we've got to be careful when it comes to foreign exchange transactions. Purchased, that isn't the only date. We've got to go and determine what is the transaction date legally. When do we, as customers, when do we get the benefits and rewards as well as the risks of ownership, right? So who is responsible for it? But anyway, so let's go and populate our invoice here. So we've got 400 units at $50 each, and they are going to create this invoice on the 11th of January. 400 units at $50 each. So let's go and draw up a little invoice there. So you can already see here, I haven't put any addresses or things in, but we can see it comes from Ohio Traders, probably an incorporated company in the USA. So that is the foreign supplier, and they invoice this to us, and we are Boston Limited. So the first product, let's just call the one product A and the other one product B. The first one, how many have we ordered there? Now, I think it was 400. Yeah, 400. So we are ordering 400 units, right? And what is the dollar amount for each? What did we just say? 50 at $50 each, right? So let's populate that invoice. So 400 units at $50 each. So what is going to be our dollar amount? If you can work that out for me, you probably don't need a calculator for it, but if you've got one handy, it could hurt. Okay, so what is the dollar amount for product? You can type for me in the chat box, please. 20,000. Thank you, Zandile. Right, so $20,000 for product A. Thank you, Zentley. So let's go and populate that, or further populate our invoice. That's not what I'm looking for. I am looking for this document. 20,000. What's a $20,000? So let's go and have a look, and we see that they are invoicing us on the 11th of January 2016. That is the invoice date, but that is not necessarily our transaction date in terms of international trade. Let's go and have a look at the second batch of items that we are ordering. So we are also ordering 200 units, probably a different kind of item that carries different kind of risks. That is why they are, negotiating who's going to have the risk while the goods are at 60. 200 units, also at $50 each. So let's go and populate our invoice here. So 200 items at $50 each. If you can type for me there, please, again. So what is the amount of that purchase? 10,000. Thank you, Zintley. Thank you, Zandile. So that will be $10,000. 10,000 or 100,000? Somebody typed there 100,000, but I think 50 times 200 gives us 10,000. Right. Zandile and Zintley, correct. 10,000. Ah, there you go. Thank you. So 10,000. $10,000. Now we've simply, those are the only two products that we have ordered, that we have purchased. So now we go and add up our invoice there, and we see that it adds up to 10 plus 20 will be 30,000. Let me just make that bold as well. Oh, $30,000. I wonder if I can put it. No, let me just leave it like that. Okay, when it in the United States of America, they've also got a system of value-added tax, but they do not call it VAT. They actually call it sales tax. But as soon as you're exporting something, it is zero-rated in the States as well as South Africa. So it'll be a zero-rated supply. So sales tax or value-added tax will be zero. So our total invoice amount will be $30,000. So there we have the invoice. Okay, so we've got an invoice price. That is the invoice that is going to be sent by the supplier Ohio Traders to us. That invoice is going to not change. Okay, that is the invoice for the total transactions. But now, ladies and gents, now we've got to determine when do we take upon ourselves the risks and responsibilities of ownership. So in the case of, let's call it product A, the first one there, purchased 400 units of inventory at $50 each from Ohio Traders on the FOB basis. It means free on board. So remember, as we've said a few weeks ago, that is seen from the perspective of the supplier. So as soon as the supplier has loaded the goods and the goods have been loaded on board the ship in the foreign port, the port of origin, then we as customers, we assume responsibility for the goods. So we must pay the freight charges. We must arrange for the insurance and so forth. Okay, so ladies and gents, if we look at now the next paragraph where they say the inventory was loaded in America on the 12th of January 2016 and offloaded in Cape Town Harbor and cleared by customs on the 23rd of February 2016, which one of those two dates will be deemed our transaction date we are using the FOB system? Can you type for me there, please? Which of those dates will be deemed the transaction date? Somebody type for me. 12th of January, says Andile. Well, anybody wants to say something different? Yes, it is the 12th of January, right? So as soon as the goods are loaded on board, thank you, Sinclair, on board that ship, the supplier is no longer responsible. They are free of responsibility as soon as the goods are loaded on board this ship. So that means, ladies and gentlemen, our first transaction date is going to be on the 12th of January 2016. So let's go and populate our answer sheet now. So 12th of January, let's go and see where's our journal. There we go. So this is 2016. And this is, what did we say, January? And our first date that is important for us, our first transaction date is the 12th. Okay, 12th of January. Now, ladies and gents, now we've got to decide which account are we going to debit in this case. You can type for me in the chat box again, which account are we going to be debiting? Bearing in mind that we are using the perpetual inventory system. Which account are we going to debit? Somebody type. Inventory, there we go, Zandile. We are going to debit inventory. If we had been using the periodic inventory system, thank you, Dale, all correct, we are going to debit inventory just for the sake of completeness. If we had been using the periodic inventory system, which account would we have debited then? Which account would we have debited then? Ooh, now we're talking financial accounting, one word here. It starts with a P. Purchases, you think correctly, Sandy. purchases, you think? It is correct. Then you would have debited purchases. If you are using the periodic inventory system, you accumulate your purchases on that account during the course of the year, and only at the end of the year, when you do a physical inventory count, will you know what your year-end inventory is, which means that you can then calculate your cost of sales. Whereas if you are using the perpetual inventory system, every time you do a sale, you are also going to calculate the cost of sales. So you have a running total of your inventory. Okay, so which account are we going to credit, ladies and gents? You can type for me. Which account are we going to credit? What do you think? Which account are we going to credit? Remember, we are purchasing something from a supplier. We owe them the money. Like Mrs. Moore said, we are buying on credit. Which account are we going to credit? Correct, Michelle, in your creditors ledger, retail trade payables, foreign creditors, Ohio creditors, there's Zandile actually has got it perfect for us. So, ladies and gentlemen, you are going to, in your general ledger account, it's going to be the general ledger account called foreign creditors. But you must also remember you've got a besides the general ledger, you've also got a creditors ledger, right? So you have to go and record that in the creditors ledger as well. And in your creditors ledger, you've got individual accounts for each supplier. So you've got to record it like that, that you know where to post it to, right? So like Zintle said there, the correct account to go and credit there would be foreign creditors. And then we are also going to indicate which particular creditor so that we can post it to our creditors ledger as well. Okay, so now we've got to put a value to this. Now we've got to calculate the amount that we are going to peg our purchase of the inventory at and also raise the liability towards our foreign creditor, which is Ohio Traders. Okay, so let's go and have a look at our invoice. Remember, this is now only for part of the invoice. This is for what we call product A, right? Product A. So what do we purchase in terms of dollars? What is the value of our purchase in terms of dollars? I'm hovering my cursor over it, but I'd like you to type it just to see whether you are all on the same page. Thank you all. Thank you. $20,000. There we go. So let's maybe go and type it in there. $20,000 that we owe for it. So let's type there $20,000. Now, as you know, because our reporting currency is rands and not dollars, it means we are also recording our ledgers and our journals in terms of rands. So it means we have to go and translate or convert this to rands now. On which date? On which date? The date is the transaction date, which is the 12th of January, right? So now we've got to go and have a look. What was the spot rate? And we spoke about spot rates a few weeks ago. What was the spot rate on the 12th of January? Remember, if we use that one, which is 8 Rand, it's going to be incorrect, right? Incorrect. That is only the invoice date. But we became responsible for the goods on the 12th of January when the goods were actually loaded on board the ship in the foreign port. So on that date, the exchange rate was, here we go, 7 Rand 50. 7 Rand 50 to the dollar. So each dollar would have cost us 7 Rand 50 if we had to buy a dollar on that date, which we don't. We are just recording a purchase, right? Okay, so let's go to our journal. So that will be multiplied by 750. Okay, so please, you can type in the chat box for me. What does that give us? 20,000 times 750. 150,000. Zintle, Bradley, Pizwapi, 150,000. Zandile, 150,000. Well, if all three of you agree with that, it is probably right. Okay, so let's go and record that entry. So that'll be 150,000 rands. And sorry, that is. Oops. Let me just correct this. Let me just move that. I started my inventory next to the debit and credit. Let me just move all of this one row down. Just move that one row down. I have to move that one row down. Now I'm wasting your time. Sorry about that. And that is the one we are crediting. Right, okay, so sorry that I'm wasting your time there, but anyway, so now we are debiting inventory with 150,000 and we are crediting foreign creditors, bio traders with 150,000. Okay, then I must just move this down as well. Apologies for that. Okay, so that is our first transaction. We've recorded it. Okay, so now let's go and have a look at our second part of that same purchase transaction. So now let's go and have a look again. They say we also purchased 200 units of inventory at $50 each, but then we have negotiated the delivered at term basis. Delivered at terminal basis. Now we've got to have a look at this sentence again. The inventory was loaded in America on the 12th of January, so we know that related to the FOB, on board basis. And then what is the important thing when we have negotiated delivered at terminal basis? This is the important one. It was offloaded in Cape Town Harbour, right? It is offloaded in Cape Town Harbour when? On the 23rd of February. If we had been using the delivered duty paid method, then that second part of the sentence would have been the important one when it was cleared by customs. But fortunately for us, both of those things, both of those events happen on the same day. Anyway, the fact is delivered at terminal. That is the important thing. When were the goods offloaded in the port of destination? And we see that was on the 23rd of February. So what is going to be our deemed transaction date there? You can type for me there. I know this one is very straightforward. What is going to be our deemed transaction date? Here. 23rd of February. There we go. Yes, 23rd of February. Thank you, Michelle. Thank you, Sinclair. Thank you all. So the 23rd of February 2016, that is going to be our deemed transaction date. So that means, ladies and gentlemen, when are we going to record this journal entry? On the 23rd of February. So let's go and do that in our journal. So this is now February. This is not January anymore. So we put in the month there. That was on the 23rd. Okay, now, ladies and gents, let's ask the question again. Which account are we going to debit if we are using the perpetual inventory system? Inventory, thank you, inventory, right? So we're going to debit inventory if we had been using the periodic, thank you, Jaden, as well. If we have been using the periodic inventory system, then we would have debited purchases, right? So again, we are going to debit inventory. So I'm just copy that. But I'll just type it in. Which account are we going to credit, ladies and gents? It's going to be that same account there because we have purchased it from exactly the same supplier. Okay, so we are again going to raise the liability towards that foreign creditor, Ohio traders. So we're going to credit foreign creditors. That is our general ledger account. Which particular creditor in our general in our creditors ledger? That will be Ohio traders. Okay, but again, now we've got to put a rand value on it, right? Because that is our reporting and recording currency. So let's go and have a look at our invoice. What is the value of this purchase? That is now product B. So if we look at product B, what was the value of the purchase? Here we go, $10,000, right? $10,000. But we cannot record it in our books at $10,000. We've got to translate it to rand first. Let me just start there. No, that's not rand. It should be dollars. So $10,000. And now we've got to go and have a look. What was the spot exchange rate on that date, the 23rd of February? So let's go and look at our ticker board. Right. So if we have a look at the various spot rates there we see on the 23rd of February, the exchange rate was 7 rand to the dollar, right? 7 rand to the dollar. So if we had purchased the dollar on that day, each dollar would have cost us 7 rand. We're not purchasing dollars on that day, but we've still got to pay a value to our inventory on that particular date. So, ladies and gentlemen, that means we have to go and multiply that by 7 rands. Oops. 7 rands. Okay, that's a very easy sum. What does it give us, ladies and gents? Gives us, thank you, 70,000 rands. We're going to debit inventory by 7,000 rands. We're going to credit foreign creditors, Ohio traders, with 70,000 rands. Just one thing that I'd like to mention here, ladies and gentlemen. I know that sometimes students find this confusing. The inventory that we have now purchased, that we have recorded, is that inventory denominated in a foreign currency now or not? If you can just type for me, yes, it is in a foreign currency, or no, it's not. The inventory. I like trick questions, eh? Yes, is it still denominated in a foreign currency, or no, is the inventory not denominated in a foreign currency? Thank you, Zentley. You are 100% correct. No, the inventory is now on our premises. It is on shore. It is in South Africa. We have it right under our noses, right? So it is not foreign denominated anymore. So it means whatever we do with the inventory in future, we are not going to convert it at a different exchange rate again, because it has already been converted. It's already been translated. Okay. What is, however, in a foreign denomination, in a foreign currency, is our creditor, right? Our creditor is still foreign denominated. Okay, so I just wanted to make that point, that you must remember the inventory is not foreign denominated anymore, right? So you're not going to convert the inventory at any future date to using any other exchange rate again. It's only your creditor, your foreign denominated asset or liability that you have to go and convert at future dates. Okay, so now let's go and have a look at the next step here. So what they say there, on the 24th of February, our company, Boston Limited, paid 10,000 rands by electronic funds transfer to transport the inventory from Cape Town Harbour to Boston Limited, to our premises in Bellville. That is that last photograph we had in that little slideshow, right? It's on the back of a big horse and trailer. So they are now they are transporting that container with the goods from Cape Town Harbour to our premises in Bellville. Okay, ladies and gents, now the first question we've got to ask here. is if we are using a perpetual inventory system, maybe we can ask a question before we even ask that question. Should this be regarded as a directly attributable cost? This transport, is it a necessary cost? Let's maybe just ask that. If you can type yes or no, is it a necessary cost? Yes, thank you, Richard. Thank you, Erasmus. It's a necessary cost. Thank you, Sinclair. Okay, thank you, Mbuyisi and Dale. It is a necessary cost. Then we know there are two subsequent questions before we can determine whether this is a direct attributable cost or not. The first question is, does it play any significant, doesn't matter which order you do it in. I just want to ask the question in such a way that we have to ask both subsequent questions every time. So does that play any significant role in the condition of the inventory itself? Yes or no? Does it play a role in the condition? Does it change the inventory itself? Would you say yes or no? No, thank you, Mbuyisi. Thank you, Rasmus. It doesn't change the condition of the inventory. Thank you, Zintle. You know, there is a second subsequent question. Thank you, Rukwaba. The second subsequent question play a significant role in the location of that inventory. Yes or no? Does it change where the inventory is at, where it is located? Yes or no? Yes, Sinclair Mbuyisi. Thank you. It does, right? So if it either plays a significant role in the location or the condition, and it is a necessary cost, then we know it is regarded as a directly attributable cost, which in turn means that we are not going to write it off as an expense. It has to be capitalized as part of the cost of the, in this case, inventory. Okay, now the second question, which I started asking a little bit earlier. So if we are using the perpetual inventory system, which account are we then going to debit with that cost of 10,000 rands? Which one are we going to debit? You can type for me there, please. Inventory. Thank you, Erasmus. Right, so then we are going to debit inventory, right? Just as a matter of completeness, if we had been using the periodic inventory system, which account would we then have debited? So this is February, I think it was the 24th. If we had been using the periodic inventory system, which account would we then have debited? Just inventory. And then I'm going to peek at the chat box. In this case, actually, Dale, not purchases. In this case, we would have had a separate account, which we would then call transport inwards. And that account at the end of the year would then have up here, but I get it back. So then we would have had a separate account, transport inwards. But that account would also have been closed off to your cost of sales at the end of the year, which effectively means that it would have formed part of the cost of the case. Okay, so there we go. Thank you. So the principle remains the same. Now, ladies and gents, which account are we going to credit? Let's just maybe have a look there at that again. They say, they don't tell us who the transporting company is, but they say paid by EFT. By the way, ladies and gentlemen, I just made two small little changes to the question in your handout. In both cases, they talk about checks, paid by check, paid by check. Nobody uses checks anymore, as far as I'm aware. Even in accounting 1, where the textbook talks about checks, we've changed all of that to EFTs. Everybody does their banking electronically nowadays. So anyway, the question was, which account are we going to credit? And there we've got the answer. Lubapalo, Richard, thank you all. So we're going to credit bank account. Money flows out of our bank account. So we That amount that we are paying, was that denominated in our local currency, rand, or was it denominated in a foreign currency? Local or foreign? I said we paid. Thank you all. Let's go to the chat box quickly. Local, 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 local. Thank you, Brad, Bell, and Richard, and Zantley. Rand, local. Oh, so that means we do not have to go and convert it. It is already denominated in rand. So we're simply going to debit inventory with 10,000 rands. And we're going to credit our bank account also with 10,000 rands. That is the amount flowing out of our bank. Okay, so far so good. Hopefully, good luck. So now let's go and see what was the next event that occurred there. What happened next? They say on the 26th of February, right? So 2 days after it was transported to our premises, excuse me, we paid 20,000 rands by electronic funds transfer to Boxit Limited for packaging the inventory in boxes to be sold as a unit, right? So whenever we are selling it, we're not going to sell them individually. They are going to be packaged as a unit, and we are going to sell the box as a unit, not individual little items. We are basically creating a new little product here. So what we have to decide here, as per usual, does it qualify as a directly attributable cost or not? So we go through our usual process that we have with inventory as well as with property, plant, and equipment. So we ask the first question, is it a necessary cost? Yes or no? You can type for me, is it a necessary cost? Looks like you're not selling it individually. We have to make a little package. So a necessary cost, yes or no? Ewe or Heiko? Yes, yes, thank you, Dales. Thank you, Erasmus. Thank you, Zentley. Yes, yes, it is a necessary cost. But now we know there are still two further subsequent questions that we've got to ask before we can determine whether it's a directly attributable cost. So let's ask the two questions in such a way that we both have to ask both again. Right. Does that play a significant role in the location of the inventory? Does it change where the inventory is at? Yes or no? Thank you, Dale. No. Thank you, Rukwaba. Thank you, Rasmus. It doesn't change where the inventory is. But now there is a second subsequent question that we've got to ask. Does it play a significant role in the condition of the inventory? Does it change the condition of the inventory? Does it now make it saleable? Yes. Thank you, Rasmus. Thank you, Bradley. Thank you, Nasile. Okay, right, so it does. So therefore, we're not going to write it off as an expense. We are going to capitalize it as part of the cost of the inventory, ladies and gents. Okay, so let's go and do that. Let me go down to my journal entry, right? So now, that was on, what was it, the 26th. 26th. Now again, ladies and gents, we must now go and determine which inventory system are we using. And as you know, if we are using the perpetual inventory system, which we are, then we are going to debit which account? And with that one again, right? So we are going to debit inventory. Missed out the I again. Inventory, right? And which account are we going to credit, ladies and gents? Let's go and have a look at that sentence again. They say pay 20,000 rands by EFT, electronic funds transfer, right? So which account are we going to credit? Let me have a look at the chat box. Bank, bank, bank. Thank you, Richard, Erasmus, Dale, etc. Okay, so we are again going to credit our bank account. Okay, let's go and do that. Let's go down to our journal entry. Going to credit our bank account. What was the amount that we've transferred, ladies and gents? 20,000 rand. So as we've spoken a few minutes ago, that is not a foreign denominated amount. Boxit is clearly a local company, so we are paying them 20,000 rands. They would have invoiced us 20,000 rands. Are we going to raise a creditor for Boxit? What would you say? Yes or no? Will be paid by electronic funds transfer. Are we going to raise a creditor or are we going to credit bank? You're all correct in the first place, right? We are simply going to credit our bank account because we're not going to pay them tomorrow or the day after or next month. We are paying them immediately, right? So it's a cash expense. So we're going to credit our bank account, right? And the amount, as we've just seen, was 20,000. Right, again, so far so good. We're getting there. We're getting there. Let's go and have a look at the next event that took place. So we've transported the goods to our premises. We've now packaged it in such a way that we can sell it. But now, ladies and gents, I've actually changed the dates. Last night when I looked at this question, I only realized last night 2016 it was a leap year. So our financial year end would have been the 29th of February. I'm just nitpicking. Anyway, I've also changed that to the 29th now. Okay, being a leap year. So what happened? On the 29th is this. It's got a financial year end. It's got the financial year ends on the 29th of February. That's the first thing that you must bring to mind. Okay, which means we have to draw up financial statements, right? And if we draw up financial statements, you all know we have to draw up a statement of comprehensive income. We have to draw up a statement of changes in equity. We've got to draw up a statement of cash flows, which we're going to do from next week. We've got to draw up the notes, but we've also got to draw up a statement of financial position. And when we draw up a statement of financial position, ladies and gents, you know that it's got to be a fair presentation of the company's affairs on that date of its financial position. Picture snapshot of its financial position. But that means all of our assets and all of our liabilities need to be fairly valued on that date. They are not fairly valued in general ledger. You've got to go and adjust your general ledgers until it is a fair value, until it reflects a fair value of the assets and liabilities. Okay, so now we know 29th of February, year end. So let's go and see what happens on the 29th of February. First of all, they say there, the gross realizable value of the inventory is 240,000. And it is estimated that it would cost 30,000 rands to sell. Now, ladies and gentlemen, please, I'm going to give you 30 seconds. Please get something to write on. Get a little notebook or a piece of a pen or a pencil. I need you to take some notes. I only realized that there was a little bit of a shortcoming in the financial accounting 1 teaching of inventory. You have learned in financial accounting 1 how to record these transactions, how to value, not importing, I'm just talking about local purchases, but the disclosure of financial of inventory was not properly covered. So I'd like you to make a few notes. Now, the standard that deals with inventories is IAS 2. And when it comes to the measurement, not the initial measurement, you've learned all about that in financial accounting 1. But when it comes to the subsequent measurement, in other words, when you draw up financial statements, that, in my opinion, I've only realized this year wasn't properly covered. So when it comes to the valuation or the there is a paragraph in IAS 2, and if you can please make a note of it here, inventory must be disclosed, measured. Let's maybe measure. I hope you're writing. Inventory must be measured at the lower cost or net realizable value. Right, I'm just going to repeat that. Put note there. Inventory must be measured at the lower of cost or net realizable value. Now, we all know how to determine the cost. Cost is your purchase price plus the directly attributable cost, right? We know that. Now you need to make another note there. What is meant by the net realizable value? The net realizable value. The net realizable value, ladies and gents, is basically what you can sell it for, which like this question does, which they very often refer to as the gross realizable value. So the gross realizable value is what you can sell it for. Then to convert that to the net realizable value. Your net realizable value is what you can sell it for less two things. Less any cost that you need to still incur to complete the product, to get it in a saleable condition. So if you are talking about an item that isn't ready to be sold yet, such as work in progress, and you still have to complete it, you still have to make it a finished item, then the cost that you need to incur to be able to finish it so that it is in a saleable condition must be deducted from the gross realizable value. That's the one. And the second one that you need to deduct is any cost that you need to incur to be able to sell the item. Right, so just to complete that little definition, your net realizable value is your gross realizable value, which is what you can sell it for, less any cost that you need to incur to complete the product, less any cost that you need to incur to be able to sell it. So if you have to advertise it, that is a cost that you need to incur to be able to sell it. Or if you have to package it in a different format, now nobody wants your box anymore. They want items individual, and you've got to unbox it, right? So if you have to incur cost to be able to sell it, then it must also be deducted from your gross realizable value. Okay, long story. So I hope you made a note of that. I only realized now that that wasn't actually taught in financial accounting one. Am I breaking up from time to time? That is my old poor internet connection. There's too much I can do about that. Sorry, ladies and gents. Is there anything that sort of material that you missed?
Mr. Van Rensburg, maybe if you just quickly go over net realizable and gross realizable value, and just quickly summarize it, please.
Okay, I will do that, Mr. Borman. I also now realized I left my camera on the whole time, and that's eating up my internet connection. I've just switched my camera off. I don't know why it was still on. I forgot to switch it off, and that definitely, like I say, that eats up my internet connection. So, the net realizable value, ladies and gents, net realizable value is defined in IAS as S2, which deals with inventories, as what you can sell it for, the amount that you can sell the inventory for. That is often, in this question, referred to as your gross realizable value, and then less two other costs that you might need to incur. So it's your gross realizable value, what you can sell it for, less any cost that you need to incur to complete the product. So if it's work in progress, for instance, and you still have to go and convert it until such time as it is finished goods, so it's something that is now in a saleable condition, in that cost that you need to incur to make it saleable, to complete the manufacturing process, that needs to be deducted from the gross realizable value. And if you need to incur any other costs to enable you to sell the goods, so if you have to go and advertise the goods, or you have to go and package it differently than the original packaging, any cost that you need to incur, then for you to able to sell the goods must then also be deducted, right? So therefore, what we have to do, we have to first of all calculate our net realizable value, right? So our net realizable value is, in this case, what we can sell it for. So it's 240,000. But they also say, and it is estimated that it would cost 30,000 rands to sell. Okay, so it means before we can actually sell it, we'll have to incur a further 30,000 rands to perhaps convert something, or to repackage it, or to advertise it. So ladies and gentlemen, it means that our net realizable value is going to be 240,000 less 30,000, right? So that is going to be our net realizable value. So that is our first calculation. Now we've calculated the net realizable value as 210,000, 240,000 less 30,000. Now we must go back to IAS 2, where they say, how should we measure? How should we measure at a year-end date, or when we draw up financial statements, our inventory? It must be measured at the lower of cost or net realizable value. In other words, we've got to go and compare the two. So assuming that we had no opening inventory, right? Because we have to assume that in this question. What is the cost of our inventory at this stage? Let's go and have a look at our journal. What is the cost of our inventory? How many times did we debit inventory? 1, 2, 3, 4 times. So our cost in total is 150,000 rands plus 70,000. That gives us 220,000 plus 10,000. That gives us 230,000 plus 20,000. That gives us 250,000, right? So the cost that is currently recorded in our ledger with regards to inventory is 250,000 rands, right? 250,000. And what did we just say? If you can type for me there. What did we just say? What is our net realizable value? What did we just say? What is our net realizable value? What is our what we can sell? Thank you. Okay, so our net realizable value is 210,000, and our cost, the cost that we are carrying in our books of account, is 250,000. So which one of the two is now the lower? The cost, or the, let's just use an abbreviation, NRV, net realizable value. Which one is the lower, the NRV or the cost? If you can type for me, please. Which one is the lower? The NRV, thank you, the 210,000, as simply says there, right? That is the lower of the two. So, ladies and gents, at which value should we disclose our inventory? At 250,000 rands, as it is in our books of account at the moment, or at 210,000? Lichler has already given us the answer there, right? At net realizable value, which is 210,000. That is what we've got to disclose it at in our statement of financial position as inventories under our current assets. Now, ladies and gentlemen, one thing we've got to be careful. Can our general ledger account balances differ from the amounts we disclose in our financial statements? Yes or no? No. Thank you, Lichte. No. Anyone else want to say yes or no? I suggest you do not answer anything different. It is no. Because if your ledger accounts differ from the amounts that you are disclosing in your financial statements, you know what they call that? They call that fraudulent financial reporting. If your ledger accounts do not agree with your financial statements, it is referred to as fraudulent financial reporting. But now we know We have to disclose it at 210,000 in our financial statements. We also know at this stage the cost is recorded as 250,000. So ladies and gentlemen, to prevent us from committing fraudulent financial reporting, it means we'll have to go adjust our ledger account. We have to go and adjust our ledger account. Which ledger account? Type for me, please. Which ledger account do we have to go and adjust? Which ledger account? Which one contains the value of inventory of 250,000? The inventory. Thank you, the inventory. So inventory needs to be adjusted, ladies and gentlemen. Now, let's ask another question. Do we have to adjust the inventory balance in our books of account upwards or downwards? You can type for me up or down. Should we adjust it upwards, make the value more in our ledger, or should we adjust it downwards, make it less in our ledger? Downwards. Thank you, Leslie. Right. It currently carries a value of 50,000, but we are going to disclose the value of our inventories, make it less. Thank you, Dale. Yes, we've got to go adjust it downwards, right? Because we are carrying pie in the sky. We are carrying literally here an inflated value. We are carrying a value of 250,000, but we know we cannot sell it after deducting further costs. We cannot sell it for more than 210,000. That's the maximum that we can sell it for. So we are carrying an inflated value, right? Pie in the sky, as we always say. So we have to adjust it downwards. Now, ladies and gentlemen, as it stands, before we make it adjust, does the inventory account have a debit or a credit balance? You can type for me, please. Does it have a debit or a credit balance currently? You can see it in front of you. A debit, thank you, Leslie. It has a debit balance. Thank you, Michelle. It has a debit balance. So if we now want to go and decrease the debit balance, what do we have to go and do with that inventory account? Debit it or credit it? Decrease it. Thank you. Thank you, Michelle. Thank you, Leslie. Thank you. Now we have to go and credit the account, right? Because we want to reduce the balance on that account. So let's go and do that, ladies and gentlemen. This we know happens on the 29th, the last day of our financial year, because it's a leap year. So we are going to credit inventory. And credit inventory by how much? Maybe let's figure out the amount now. This is quite easy. Figure out for me, by how much must we decrease that balance? How much? Currently, we are carrying a value of 250,000, but we're going to disclose it at 210,000, 40,000. Thank you, Leslie. Right, so we've got to go and adjust it downwards by 40,000. The difference between the 250 and the 210,000. Right, so that will be adjusted downwards by 40,000. Which account are we to debit, ladies and gentlemen? You will know this from our first term. We had a situation there as well. We are not writing it off, right? We can still sell it. We can still sell the inventory, so we're not writing it off. We're just writing the value down. So we're going to call it a write-down, which is then going to be disclosed as an expense, which we regard as a material expense in nature. So it will be disclosed in our profit before tax as well. So write-down of, excuse me, write-down of inventory, and we're going to debit that by 40,000 rands. Right, so now we are happy at the end of the year. When we draw up our financial statements, we are quite happy because our inventory is now fairly valued. Do we have any other asset or liability that we might have to go and adjust, ladies and gentlemen, that we know of in this particular question? Yes or no? Let's start there. Yes or no? Is there any other liability or asset which might not be fairly valued in our books as we stand? Yes or no? Yes. Who says yes? Who says no? You must remember, ladies, what is the question again, Leslie? I'm saying, is there any other asset or liability in our books of account, in our ledgers, that might not be fairly valued now here at the end of the year on our reporting date? Remember, we said when we talk about foreign exchange transactions, there are 3 dates that are reported: our transaction date, which we've determined when we recorded the acquisition of the inventory. We said the settlement date is also very important. That is when we pay the supplier. But we also said that if there is a financial year end between the transaction date and the settlement date, the financial year end date, the reporting date, then also becomes important. Why, ladies and gentlemen? We've got to, there we go, exactly, Dale, exactly, not necessarily the inventory, but the amount outstanding to the foreign supplier, right? So the amount outstanding to the foreign supplier, that must also be fairly presented, that must be fairly valued on our reporting date. So let's go and have a look. What is the balance outstanding at the moment on that foreign creditor? If you can type for me in the chat box, what is in our creditors ledger in that for Ohio traders at the moment? What balance are we carrying for them in our books of account now? You can type for me there, please. There we go. Uninkeba. Sinclair, thank you. 220,000. Leslie, missing 10 there. There you go. Very quickly pick that up. So we are carrying a balance of 220,000 rands. But now, at the end of the year, we must go and see. We must now go and judge, is that a fair presentation? Is that a fair presentation? How are we going to do that, ladies and gentlemen? How are we going to do that? We are going to say, what do we owe this creditor? What do we owe the creditor? Before I display it, I want you to type for me there. Let's see who's got this right. What do we, in reality, what do we owe this creditor? In actual fact, in reality, what do we owe the creditor? I know we've got 220,000 rands in our books. What do we really owe? What do we owe the creditor? For me, I'm going to give you a hint now. I'm not going to say it, but I'm going to give you a hint. What do we owe the creditor? There, Mrs. Moore has helped you out. What does that invoice say? What does the invoice say? Remember, this invoice doesn't change. We received this invoice from Ohio Traders, the supplier. What does that invoice say? What do we owe them? We owe them that. But that is what they tell us. At the end of the month, they would probably have sent us a statement as well. And that statement will still indicate we owe them $30,000. Right? That is what we owe them. Thank you, Sinclair. Right, so we owe them $30,000. So now we've got to go and see, does that 220,000 rands that we are carrying as a balance, is that a fair presentation? So how are we going to do that? We know that we owe them $30,000, right? We owe them $30,000. There we've just seen it. There's the invoice. There's the evidence, right? There's our documentary evidence. $30,000. Now at the end of the year, what is the exchange rate? Ooh, let's go to our ticker board. There we see 29th of February, the exchange rate is R6.50. So it's not the same as when we recorded that product A, it's not the same as when we recorded the purchase for product B. The amount that is outstanding is $30,000, and if we should pay them on the year-end date, how much will each dollar cost us? Each dollar will cost us R6.50, right? So a fair presentation on the year-end date, a fair presentation on the 29th of February will be the $30,000 multiplied by R6.50. Somebody can just work that out for me, please. If you can type it for me in the chat box. Richard there says 195, Zinkler as well, Leafler as well. Okay, so a fair presentation, Erasmus as well. So a fair value for that creditor would be 195,000 rands, right? 195,000. So, ladies and gentlemen, we know that we are carrying a balance of 220,000. But we are going to disclose that liability at its fair value, which is 195,000. So does that mean we have to go and increase the creditor's balance in our books, or do we have to go and decrease the creditor's balance in our books? Increase or decrease in our books? Thank you, Kleber. Thank you, Lindsay. Thank you, Michelle. We've got to go and decrease it, right? We've got to go and decrease it. We are carrying a value of 220,000, but the fair value, the true value at the year end is 195,000. So it means we have to go and decrease that balance, right? Now, ladies and gentlemen, let's ask the next question. Being creditors, being a creditor, does that carry a credit or a debit balance? Does it carry a debit or a credit balance as we stand at the end of the year? What kind of a balance is it? Credit. Thank you, Leafley. It is a credit balance, right? And now if we want to go and decrease the credit balance, what do we have to go and do with that account now? Debit or credit? Thank you, Leafley. So now we've got to go and debit that account, right? Exactly. So let's go and do that. So on that date, we've got to debit. Where is our creditor? Foreign creditors, Ohio traders, which is a total balance of 220,000 in our books now. We've got to go and decrease that. So it means we've got to go and debit that account. By how much, ladies and gents? Let's figure out the figure there. By how much must we go and debit? You can calculate for me there. How much must we go and debit that account? Remember, it carries a balance of 120,000, but we are going to disclose it as 195,000. Thank you, Michelle. Thank you, Leslie. Thank you, Richard. Thank you, everyone. So we have to go and decrease the balance in our books of account by 25,000 rand. Go and do that. 25,000 rands. Okay, ladies and gentlemen, now we must also obviously go and credit something. Now, why are we reducing this creditor's balance? Let's ask the question. Let's go through this logic. Why are we decreasing the balance? Did we send any products back to the creditor? Yes or no? Did we return any goods? No, thank you, Richard. Thank you, Del. No, thank you, Leaflet. We didn't return anything. Did we pay them anything? Yes or no? Did we pay them suddenly anything? No, also no. Thank you, Richard, Leaflet. Right, we haven't paid them. Oh, my word. So why then? Why? Why are we reducing the balance? Because of what? What is our reason? Why is that balance now smaller? Because the rand has strengthened against the dollar, right? The rand has strengthened the dollar. Rand appreciated. That's even better put than me. Thank you, Zinkler. The rand has appreciated. So it's because of the currency fluctuation. In this case, it is beneficial to an importer. It's obviously not beneficial to an exporter, but we are importers. So there, if the rand strengthens, it means each dollar is going to cost us less in rands. So it means what kind of what account will we credit here? What will we call that account? What does this represent now? There's only one of two possibilities, ladies and gents. Okay, let's start here. It's a credit. You've got to credit an account, right? You've got to credit in an account. So if it's a credit, will it be like an income or will it be like an expense? And Kerber has already got it right. It is like an income. Dale has also got it right. Foreign exchange gain. Or should we call it a profit on foreign exchange? Let's think about that. Should we call it a foreign exchange gain? Or should we call it a profit on foreign exchange? The question that we've got to ask ourselves is, has that income, that gain, has it been realized yet? Have we actually paid that creditor? Have we realized that profit? Yes or no? Have we realized it yet? And the answer is no. We haven't realized profit yet, so therefore we cannot show it as part of our profit or loss. Therefore, it will be seen as something, a little different animal that we've spoken about at the beginning of the year. It will therefore be seen as part of our... I've got to bet something here. If you get this right, I'm not going to put too much on the line. I'll buy you a Big Mac. If you're not going to see that as part of your profit and loss yet because it hasn't been realized yet, then you'll see it as part of what? I'll give you 3 seconds to give me an answer there. Get it right, I owe you a Big Mac. Anyway, you're quite correct with your answer, but I'm just asking a different question. So that's going to be seen as what? Haven't realized it yet, you're going to call it a foreign exchange gain or gain on foreign exchange, and the amount is 25,000. So if you haven't realized that yet, which you haven't because you haven't paid the customer yet, you're not going to show it as part of your profit or loss. What are you going to show it as? If you draw up your statement of comprehensive income, here's the time: 10 seconds, 9, 8, 7. There goes the burger. There goes the burger. 4. No, nobody's going to get that. Fantastic there, Mrs. Colleen. Well, I owe you one, Mrs. It's going to be part of your other comprehensive income, right? Just like that gain on investment that we had at the beginning of the year. So that will be seen as other comprehensive income. So you recognize it as income, but you recognize it below the profit or loss for the year. Okay, so that was just my second trick question for the day. Okay, ladies and gents, the fact remains now we have fairly valued our inventory. We have fairly valued our inventory, so we've made that adjustment. We have fairly valued our foreign denominated liability, which was a foreign creditor. So now we can use the balances in our ledger accounts in our statement of financial position. Right. So now they agree with the ledger, the amounts that you disclose in your financial statements, they agree with your ledger accounts, and they are also fairly valued, right? So it is a fair presentation of the assets and liabilities. The asset being the inventory, and it's a fair presentation of the liability, which is your foreign creditor. Okay, ladies and gents, so far, so good. So we've drawn up our financial statements. So now let's go to the next event. What else has happened? What else has happened? Here we see on the 31st of March, They settled the amount owing to Ohio traders in America. So they settled the amount, right? What does that mean? It basically means they paid it in full. They've paid it in full. Right, so if you settle your account, you pay it in full. Okay, so now we've got to go and record that, ladies and gents. So let's go and do that. I'm going to use a shortcut here. But this shortcut you can only use if you settle the amount in full. If you do not settle the amount in full, if you make a partial payment, what you then have to do is you first have to convert the full balance on that foreign creditor to rand on the settlement date, and then thereafter you record the payment. But if you are paying it in full, then you can actually use a little shortcut. But anyway, in the previous classes of the Borman, you've seen how to convert the outstanding balance already, more than once. So I'm going to do the little shortcut in this case. Okay, so the shortcut. When is the date of payment? It is in March. So we type in our month there. On which day does it take place? The 31st. Okay, ladies and gents. So at least we've got the date. That is a start. So now what we've got to go and do, ladies and gents, we've got to now ask ourselves a few questions. Let's maybe start with the balance on the account of the creditor. As it stands at this point in time when we are going to make this full settlement, what is the balance on the foreign creditor Ohio traders account? If you can type for me there, please. What is the balance on that account now? Thank you. Whoa, you are on fire. 195,000, right? So that is the balance on that account as it stands. What are we going to owe them? If we are making a full settlement, if we are paying all of that outstanding amount, if we are paying them in full, what should the balance on that account be once we've recorded the payment? You can type that for me. What must be the balance outstanding on that account once we've recorded the payment, which we are going to do now? What do we owe them if we settle the amount in full? We owe them nothing. Okay, zero. Thank you, Mrs. Moore. So that means we owe them nothing. So, ladies and gentlemen, with how much must we go? Well, let's ask the question first. That balance on the creditors, the foreign creditors, is it a credit or a debit balance? Just type for me there. As it stands, is it a debit or a credit balance? Credit. Thank you, Leslie. So now we're going to write that credit balance down to zero. Do we have to debit or credit that account now? Thank you, Dale. Thank you, Leslie. Thank you. Right, so now we've got to go and debit that account. I think that's probably still in the memory. Yes. So now that means we've got to go and debit foreign creditors, Ohio traders, by how much? Write the balance on their account off to zero by 195. 100 and what was it? 195 was it? I think 195,000. Okay. Then, ladies and gents, what happens when we make a payment? We are now going to pick up our phone. We're going to call the manager of the foreign exchange department at our bank. And we are going to tell them, listen, you need to transfer an amount out of our account to a bank account in America. And then the bank manager will say, okay, you must just send me a written confirmation by email. But anyway, how much do you need to transfer? How much do I need to transfer on your behalf out of your account to their account? If you can type for me, that's my third little trick question of the day. What are you going to tell the bank, the manager of the foreign exchange department at your bank? How much must they transfer? How much must they transfer? Type for me there. How much must they transfer? What's your answer going to be? Ooh, like it looks like I need to give you a little hint again. Let's go down. Let's go down. Let's go down. There's our hint. There's our hint. Mrs. Colleen Moore has given you. Remember, simply, we're not going to pay them in rands. The rands are going to be coming out of our bank account, but through the international, what do they call the international banking system? What's that again? I forget now. They're going to convert it. They're going to translate it into dollars. So there's my hint there. What do we owe them? What do they owe them? Thank you, Leslie. Yes, Mrs. Colleen has already also said we owe them $30,000. So when the bank manager asks us how much must I transfer from your account to the American account, what are we going to tell him? You must please transfer $30,000, right? That is why that is the amount outstanding. Remember, it doesn't matter what's in our local ledgers. We still there's the evidence. There's our document. There's the documentary evidence. We owe that supplier that amount, right? We owe the supplier $30,000. So we're going to tell the manager of our bank's foreign exchange department, please transfer $30,000. And that manager will say, no worries, I'll do that. I'm going to obviously charge you a bit of a commission on this, but let's not go there for our purposes. So, ladies and gentlemen, money will be leaving our bank account. So which account do we need to credit? You can type for me. Which account are we going to credit when money leaves our bank account? Thank you, Michelle. Thank you, Erasmus. So we're going to credit. Thank you, Leslie, Zintley, everyone. So we are going to credit our bank account. I'm just going to skip a little line there because we might have another profit or a loss here. So we're going to credit our bank account. Now the question is, ladies and gentlemen, how much is going to leave our bank account in terms of rands? Now we know that we've requested the bank manager or the manager of the foreign exchange department to transfer $30,000. So now the bank manager will say, yes, I will transfer it with pleasure, but I'm going to charge you a commission. And I'm just saying this in the background. Each rand is going to cost you, each dollar is going to cost you 6 rands, right? 6 rands. So if they transfer $30,000 out of our local bank account, what is the amount that is going to appear on our South African denominated bank statement? When we get the bank statement, it'll indicate how much rands has left our account. How much in rands has left our account? If you can type for me there, please. Ooh, and Keba has already typed there. Sorry, I was still looking at a different document. Yes, so when they transfer the $30,000 out of our bank account, when we get the bank statement, which will be denominated in our currency, our bank's currency, it'll indicate that the equivalent of 180,000 rands has left our account. There, Dale has got the calculation for you. So it's $30,000 multiplied by 6 rands per dollar. So the amount that would have left our bank account is 108,000. Right, there we go. So, ladies and gentlemen, now we are satisfied in two manners. We are satisfied that once we've settled the account in full, the foreign creditors account reflects a zero balance. We're also satisfied that the amount in rand value that has left our bank account is 180,000 rands. But we are not happy with the fact that our journal entry doesn't balance. So we need something to make it balance. What do we need to make this entry balance? A debit or a credit? Our debits add up to 105,000. Our credits add up to 180,000. So it means we need a credit. We need a credit to make it balance. How much? A credit of 15,000 rands, right? We need a credit of 15,000 rands. What does that credit represent? First of all, because it's a credit, we know it's going to be something similar to an income, right? If it had been a debit that we needed to make that entry balance, it would have been something similar to an expense. There we go, Dale. So it is again a foreign exchange gain, right? This time we have actually realized it. So that will be a foreign exchange gain. Now, ladies and gentlemen, I'm going to I'm going to do it slightly different. In this case, ladies and gentlemen, has that gain been realized or hasn't it been realized? Now that you've made the payment, yes or no? Has that now been realized? Now that you've made the payment, it has been realized. Thank you, Leaflet. It has been realized. So now that can be shown as part of our profit or loss, right? It can be shown as part of our profit or loss. So in this case, I would call that a profit on foreign exchange. A profit on foreign exchange, right? So, ladies and gentlemen, there we go. Now we are satisfied. Once we've settled that account in full, it has a zero balance. We are satisfied that that is the equivalent in rands that has been transferred out of our South African bank account, and we are pretty satisfied that that 15,000 rands credit represents a profit that we've made on foreign exchange. I'm going to ask you my biggest trick question of the day. As you know, I always like to bet a few things on these questions. Just one final little question, ladies and gentlemen. I've made a little entry here, a blank entry, and you will see this blank entry. I've given a very strange date. By the way, we are done with the question. I'll ask whether you've got any other questions. Remember, we've got to our final event where we settle the account in full. And that was for the year ended 29th of February 2016, but we paid this creditor on the 31st of March 2016, which then means that is part of our 2017 financial year. Now, my trick question, and if you get this right, what can I offer? What will I put on the line? Let's say Streetwise 5. Streetwise 5. That's a nice big lunch or dinner, right? 5 pieces of chicken with chips. Oh, now I'm making myself hungry. Anyway, whoever gets this right, there's one kind of adjustment. There are many year-end adjustments at the end of the 2017 year, but there's one kind of adjustment that we will need to make, and we call that a reclassification adjustment. I'm going to give you 60 full seconds. A reclassification adjustment. Does it ring a bell? At the beginning of the year, or when we did the winter school, when we did IAS1, when we looked at the statement of comprehensive income, did we ever talk about something called an item that may or may not be reclassified? And then we spoke about reclassification adjustments. So what do we need to reclassify? I'm going to give you 60 seconds. What will we have to reclassify? And if you can give me the correct journal entry, then I will give you 2 boxes of Streetwise 5. I'm not seeing any answers yet. What needs to be reclassified, ladies and gents? Oh, Anil Anwar, I owe you a box of KFC. Leaflet, you'll probably have to get the other box. I don't know when I'll be able to see you on campus, but I will make a note here that I owe you both a box of KFC. Yes, our reclassification adjustments at the end of the year. Let me just do the chat box again. Uber Eats. Okay, you must you must send me your residential addresses. Okay. If you email your residential addresses, I will make sure that you get it via Uber Eats. Okay, I like that. Uber Eats and Mr. D Food. Those are some of my biggest expenses. Okay, so now what we need to do, ladies and gentlemen, we know that we had a gain at the end of the year, at the end of the previous year. So that foreign exchange gain. Exchange gain needs to be reclassified. So we're going to take the foreign exchange gain, which was part of our other comprehensive income last year, but now we've realized that gain as well. It has not been realized. So we're going to take that to profit on foreign exchange. Okay, and what's the amount? Just one final question, just for what? For a little salad, for a little coleslaw. What is the amount that we have to go and thank you, Lisa. What is the amount that we have to go and thank you, Anil Anwar? I'll make sure you get it. Just make sure that you send me your correct delivery addresses. What is the amount that we have to go and reclassify? Well, what was the gain that we have recognized at the end of the year? 25,000. That we now reclassify to profit or loss. So that 25,000 we are going to reclassify. So it means our total profit on exchange. Oh, yeah, foreign exchange. Total profit on foreign exchange will be 15,000 plus 25,000. So at the end of the year, we drop our statement of comprehensive income. Now we can recognize it as part of profit or loss. Amongst the other income will be profit on foreign exchange of 40,000 rands. Very, very clever, very clever. Now there, I've gone and done it. At last, I am relieving myself of very hard-earned money. I'll do it with pleasure, just because you are so clever. Right, ladies and gents, I don't think there's anything else except to ask whether there are any questions from your side. Thanks, Anil Anwar. It's okay, all sports. Yes, that was good fun. I hope you see it as that. I can't really afford losing any bets. Erasmus, yeah, I think, Mr. Borman, we can load this document for them. Or what do you feel? My autosave is on. Let me just double check. Yeah, my autosave is on. So everything I've typed has been saved. Maybe I can just type in there something, just a little explanation. Year gain reclassified to profit or loss. Okay, so the last year's prior year foreign exchange gain has been reclassified to profit or loss. Has been automatically saved? Yes, then I think we can load it to Blackboard. I'll load it just after the recording, if that's okay. Let me just wait for the recording process, and then I'll do that. Any other questions from your side, ladies and gents? Michelle, what is the class test based on? Let me think. It is based on inventory and foreign exchange. Exactly what we've done today, except different, because it's not. There you go, Mrs. Word. Exactly this. Okay, it's not always going to be a profit or a gain on exchange. Sometimes it can be a loss. It all depends on the circumstances. It's a pleasure, Michelle, but it's exactly this kind of question. So it'll deal with inventory. So you have to know that inventory needs to be disclosed and measured at the lower of cost, net realizable value. You've got to know how to or when to record your purchases, which accounts you've got to debit it, inventory or purchases, on which date you deem the transaction date to be? How do you then value the creditor at the end of the year? I'm probably saying too much now. I must stop myself. And then obviously the settlement when you make a payment on the creditor's account at the end of the year. Fantastic, Leslie. Then I'm glad if everything is clear on your side. Like I say, it takes a while for me to, well, it takes a while for the recording to be processed, first of all. I'm actually also supposed to be attending a course which I was in before the class, which I'll have to go back to this afternoon. But as soon as it's been processed, I will download it and then I'll start uploading the recording as well as this little document. But I've got slow internet, so it'll probably only be uploaded on your side, I guess, by about 5 o'clock. Thanks, ladies and gents. Any other questions from your side? Thank you, Mr. Borman, as well. Any other questions from your side? Now, what do they say in Shakespeare? Speak now or forever hold your peace. Right, so if you've got a question now, you've got to ask it now. Mr. Borman, is there anything else you wanted to add about the test maybe? I think we've pretty much told them everything that they need to know. And good luck from all of us. Anything that else there? Okay, ladies and gents, then have a good afternoon and study well, and we'll see you then on